How did Coinbase and MicroStrategy share prices rise after reporting earnings while the rest of the market is tanking?
Welcome back, folks. Time to catch up with the market on SoSoValue Crypto Daily. All right, let's dive right into the numbers. The market's taken a bit of a breather over the last 24 hours, with the total crypto market cap dipping 2.4% to land at $3.74 trillion. Bitcoin took a slight hit, down 1.2% to about $109,200, and Ethereum slid a bit more, down 2.6% to the $3,800 mark. Looking across the board, it was a sea of red. The Layer 2 sector really took it on the chin, leading the losses with an 8% drop. The AI and NFT sectors weren't far behind, both down about 7%. Seems like a broad risk-off mood today, with most other sectors seeing declines in the 3 to 5% range. But here's where it gets interesting. Despite the price dip, Bitcoin's spot trading volumes on major exchanges absolutely surged in October. We're talking a total of $300 billion, which is a massive 50% jump from last month. Now, it's not quite the peak we saw back in January 2025, but it shows people are active in making moves. On the derivative side, things have cooled off a little. Open interest in Bitcoin futures is down about 20% from the recent highs after that flash crash, but it's still holding steady with the levels we saw in May. And as we often see, this volatility has hit the altcoins harder than Bitcoin. When the king sneezes, the alts catch a major cold. Now for some big earnings news, and this is where the real story is today. First up, Coinbase. They reported a super strong third quarter. Trading volumes jumped 25% from the previous quarter, partly thanks to a friendlier regulatory vibe in the US. Their trading revenue came in hotter than expected, leading to a nice positive earnings surprise. They also gave a steady outlook for the next quarter, and Wall Street loved it, sending Coinbase shares up 3.6% in after-hours trading. You love to see it. And you can't talk earnings without talking about the biggest Bitcoin bull of them all, MicroStrategy. They also dropped their Q3 results, posting a net profit of $2.8 billion. They did note that they've slowed down their pace of Bitcoin accumulation a bit. Now, because of the recent pullback in Bitcoin's price, their market value to net asset value ratio, think of it as the premium the market pays for their stock versus the Bitcoin they actually hold, has fallen to about 1.2x. That's the lowest it's been since March 2023. And true to their strategy, the company confirmed they will not be issuing new shares to buy more Bitcoin when this ratio is below 2.5x. But how much Bitcoin are they holding now? According to fresh data from SoSoValue, it's a mind-boggling 640,808 BTC. The market reacted well to the report too, with MSTR shares climbing 5% after hours. Next up, some massive adoption news from the traditional finance world. Nordea, the largest bank in the entire Nordic region, just announced it will let its clients trade crypto-linked products starting in December 2025. The product is a synthetic ETP based on Bitcoin, developed by CoinShares, and it's mainly aimed at sophisticated investors looking for that sweet alternative asset exposure. Nordea is being smart about it, emphasizing that they are only providing the execution services, not investment advice. This is a huge signal, driven by both growing client demand and Europe's increasingly mature crypto regulations. The institutions are coming, folks. And the big bank news doesn't stop there. JP Morgan's asset management division, working with fund administrator Citco, just completed its first transaction using a new blockchain system called Kinexys Fund Flow. Okay, so what does that even mean? It's a system that tokenizes investor records and uses smart contracts to automate money transfers for big alternative investment funds. It replaces the old, slow, manual process of reconciliation and wire transfers that, believe it or not, still runs much of the private fund world. This is the kind of behind-the-scenes foundational tech that reduces costs, cuts down on errors, and truly modernizes finance. They expect to roll it out more broadly in early 2025. This is the real-world utility we're always talking about. That's a wrap for today's update. Catch you tomorrow. Same time, same place. Cut through the chaos. Focus on what drives the crypto market. Stay on top of crypto research, all in one place at sosovalue.com.